All right, in this segment, we're talking about common mistakes to avoid, because if you've never bought a house before, there are some things that you could do throughout the process that could really derail things, and people do them all the time because it's not common sense. So why don't we just run through these a little bit? Steve, give me the first couple of just common mistakes to avoid when you're in the middle of buying a house.
Yeah. So the first thing is, just make sure your application is accurate. So, let's say we did an application on you 6 months ago, you haven't bought a house yet, and then your wife lost her job. We're still qualifying you as if she has the job. We didn't know she lost it. Make sure people know what's going on. So if, losing a job, buying a new car, these kind of things, you really want to avoid doing any change to your financial profile until you buy the house. Then you can do those things. So the biggest thing I'd say, don't take out any new debt, and then don't change your income. Those are the two biggest things that people do. Now, the other thing is, on the asset side, your down payment, let's say your down payment was 20%, but then something came up and you guys just had a huge expense. You don't have that anymore. That's just another thing. You just got to make sure everyone's aware that my profile has changed. Here's the things that have changed.
Yeah. So on the application perspective, if you're pre-approved, you've gone through the pre-approval process. If there's any major change to your income or your assets or your credit, which could be like let's say you're forced to take out new debt, you just don't have a choice. Like you had to get a new car. Car broke down, got to get a new car. Just make sure you're updating your loan officer so they can take that into consideration and make sure that you're still approved for the original amount.
Correct. Right? Yep. And I would also say just, payment history, make sure your payments are staying on time and everything. Every once in a while, it's like if someone goes out and opens a new credit card, doesn't ever pay it, score can tank from that by 100 points real quick.
Yeah, I've seen that happen actually a lot where all of a sudden somebody has a 30-day late, just unbeknownst to them. The other one I see credit-wise on lates is, let's say that originally we're being approved with just one borrower, and then maybe that borrower gets married, or we're adding a co-borrower. When you add a co-borrower, you're also bringing their credit on board. So make sure that you understand, like, is that co-borrower's credit profile and their income going to add strength to my profile, or at least keep it the same? Or is that going to drag our profile down because we have to go off the lower score?
Right.
So I've seen that happen too. Give me additional credit inquiries. Like after they're pre-approved, why should they be beware of going out and letting everybody else run their credit?
Yeah, the more credit inquiries you have, the more it can impact your score. Typically, if it's a mortgage inquiry, you do have a shopping window where you can get multiple pulls without it hurting you. But let's say you go to get a new car. I mean, there's times people get their credit pulled 10 times to buy a car. It's kind of crazy, but that can actually hurt your score. So these are just things that you want to have the best score possible, because the difference between an 800 credit score and a 700 credit score, I mean, it could be a huge difference on your PMI rate, your interest rate, your total cost of your loan. I mean, there's a lot of things that could be impacted by that.
Yeah, for sure. What about cash deposits? Like if you're talking down payment and that's coming from a secure account, have you seen any issues with people making mistakes on that account?
Yes. So just so everyone's aware of, like, when we look at a bank account, we don't just say, oh, here's how much money's in there, that's it. They look at the history of what's going in and out of the account. Anything that's going into the account that's a large number, which would be, hey, it's not your normal income, right? It's bigger than that. So let's say a $20,000 deposit or something, and you make, 10 grand a month. Well, that's going to throw up a red flag. Where did that money come from? And if there's an explanation for it, it's totally fine. No one cares. We just need to document it. So for example, just had a client who had taken money out of a Roth IRA. It was like $15,000. We could trace that back and say, okay, here's the Roth IRA. You can see the money leaving that account and coming into the bank account. Totally fine. When it's something like this, though, where someone has, hey, you just deposited a bunch of money. Where did it come from? Oh, that was just cash that I had sitting, in my pillow. Well, that's not going to work, because The laws are for us, we have to verify that the money's good and it's yours. So not just that it's yours, but that it came from legal sources. If it's cash, you can't prove that, which is why we can't use cash.
Oh, that's good. Yeah. These are actually more common than you think. So, moral of the story is you pay your bills on time. If there's an update to your income or your credit or an asset situation, make sure your loan officer knows about it. Don't take out any debt. Don't let everybody and their brother pull your credit. It seems like common sense, but life happens where all of a sudden you're faced with the decision, like, am I going to allow that to happen or not? So rule of thumb is consult your loan advisor before you make any of these major changes.
Yeah. And if you're someone who has a large amount of cash for whatever reason, and you like to hold money in cash and you don't have much in savings, if you're thinking about buying a house, get it deposited now, because once it seasons, like once it's in there for 2 months, then when we look at a bank statement, we're not going to see that deposit anymore. And then you'll be able to use that money. So be smart.
Yeah, when it's got some longevity and a history to it, then it's okay. It's just when all of a sudden it's hitting the account all at once right before you buy a house, that's when all of a sudden the red flags go up.